Hey, what's going on, everybody? Happy Friday. Friday. Hopefully, y'all got something good planned for the weekend. What's your weekend plans looking like? Yeah, it sounds like a fun project. There's a lot of things in that list that sound pretty good. I've done a lot of those over the years. Um, if the rains haven't washed away the track, we're going to go to the races this weekend. And if they have, then I don't quite know what we're going to do. Tonight, I think we're going to go out and get on the bike because we haven't been out. It's been raining most of the week. Sure. What's the estimated time to get all that done? It sounds like a lot. Yeah, that should be achievable. What I have on the screen here is my robotics list. After NVIDIA's earnings, robotics really started to get a lot of attention. And so I thought, well, what, dig into it a little bit. And I don't think I'm done yet because I think there's more paths that we can go. But it's a good start at this point. So I'll end up sharing it once I get more background in these names. I can give you the list of names now, but I don't want to share the document yet because it isn't done. The way I like to do things is I'll kind of show you guys. I'll just pick on Amazon here for a moment. If I click on Amazon, it's got background, uh, what their company's strategy is for this particular topic, which happens to be robots. Two of the newest robots that they're working on, which is the Vulcan and the Titan. And then from those categories, I can expand it more, get the background, some in depth criteria. And I like this format. I like this setup to where I can scrunch things up nice and tight, or I can spread all the data out and read what's going on. This platform will, of course, take pictures as well. So um, when I have images that I want to put in there, it'll accept them and it does hyperlinks so that when I put a link in and I want to find that link later, then it handles it really well. This is the market cap of the robotics that I've put together. I had to make two different pictures because NVIDIA, Amazon, and Tesla, they're just so big that when I have those three names on there, you can't see anything else. So I have that original market cap graph, but then I made this one as well. And now stands out pretty bad. I considered taking it off, but I went ahead and left it on there. It's okay. You know, on your own, if you guys wanted to, adjust it to where you remove now from the list, I think you would see ISRG and the others better. One problem with this space is the ADRs and the fact that a lot of these companies are just really small. Some of them are penny stocks, and so while they may be on the list, they're not necessarily something I'm going to be interested in trading. One of the reasons I keep them on the list, though, is for M&R purposes, the M&A. If they happen to be absorbed or get bought in some way, then cool. It wasn't a surprise that some particular company happened to get hit. Plus, if it's on the list, we know to look for it in news articles, headlines, that sort of stuff, so that we can spot things like M&A deals, or it stays on our radar. So that's kind of what I've been working on today. We had a few opportunities to trade for sure, but it wasn't a fantastic day. So I've been putting this work together. I didn't get it finished, which I wasn't expecting that I would, but I got far enough that I'm willing to share the list of names. And then when I get the document done, I will turn it into a uh, a PDF document and share it with you guys. The Note app on the left is actually a canvas inside of Slack. Slack is kind of like Microsoft Teams or like Discord. And the difference between Slack and Discord is Discord's free. I mean, you can just load Discord up, make yourself a server, and cheers, you're ready to go, rock and roll. With Slack, on the other hand, you have to pay a monthly subscription to have it, and that makes it a bit prohibitive. Um, yeah, that's good to know because I have my own, right? Like I've got a full Microsoft business license, and so I've got servers and yeah. Thanks for the tip on that. That saved me some money. Hung around with a good friend of mine, and over the years he corrupted me. I used to joke the guy would pinch pennies twice. He was such a penny pincher. Me, it's not that I'm frivolous. It's just I never really stressed too much on trying to nickel and dime every little thing. But over the years, just kind of grows on me. And now I'm like, what? You can save me $50 a month? Well, shoot, come on, let's do that. I like that idea. It's not that expensive, but still, it is a cost. So Slack is kind of nice when it comes to how in depth you can get on your search settings. If you search for things on Discord, it's okay, but searching for stuff on Slack, you have a lot more nuanced criteria. And then it has really robust alert features that you can work through. Of course, Discord's got aftermarket stuff that you can kind of program in and use webhooks and that sort of stuff, but whatever. So I often use these canvases because I like this format, being able to scrunch things up and just it's comfortable. So when it comes to this, I've got one on drones and I've done one on quantum. There's always the big names that stand out. I generally stick those to the side and deal with them separately. It's hard to get excited over something like Amazon when Amazon is such a behemoth and has so many different paths that it's involved in. It's in quantum, it's in drones, it's in robotics, it's a pharmacy and shipping and production, manufacturing. Goodness, it's everything. So, when I find a niche like this and go digging into something like robotics, I'd rather focus on mom and pop companies whose sole focus in life is that particular thing. Whether, they're doing imaging and sensing or building arms or traction or whatever it is, that it's just that thing. And you'll find, I think, when you are doing this sort of work, that if you focus on it like that, it helps. Otherwise, you run into companies like Honeywell or Amazon, Nvidia, Microsoft, and they're just so big with so many fingers in the pie that it just muddies the water. We had some topics listed for discussion, and one of them ties into a conversation we were having the other day. We had this really nice trend day, and I had made some comments about, you know, I generally hear from people who say they were trying to trade that day and was really struggling because we had a market that just kept going higher and higher and higher and higher. And I get it. It can be a bit of a struggle, and a lot of newer traders end up fighting the trend. They are try to go the other direction, just banging their head against the wall. And there's a way to kind of avoid that mess. It's not perfect, but the idea would be that we need to identify what a trend day looks like, especially these kind of specific trend days. Forced buying in this situation, this is the 27th of May, and you'll see these sorts of days. It's not like this is the first time it's ever happened. In the indexes and in the sectors, they are mean reverting. So they have specific types of chart patterns that just repeat over and over and over again. And there's a cycle of six. So one of the things we have to try to determine every day is what is today's pattern. It's going to be one of the six. Now, it can start as one pattern and then shift at some point in the day and be one of the other patterns. But that's a constant goal that I'm working on throughout the whole day, is trying to label or classify what is today's price action. Is it a trend day? And if it is a trend day, what kind of trend day? Forced buying, vol up, spot up. Uh, we have another one where it's a short squeeze and shorts all over the place are covering like crazy. So we have different kind of trend days, and that helps us try to determine how long it's going to last. We have the trend days that run until lunch and then they stall out there and we just hold the range for the rest of the day. Or we have the trend days that run into lunch and then we get the rounded reversal and we give it all back again by the end of the day. So we need to know which one of those is going to be. Or the third one, where, like we were looking at here, it ran all the way to power hour, which is what we would consider it just ran all day. And it never really gave us a chance for a rounded reversal. And those are the three trend days. Two of those trend days change at lunch. The third one just gets through lunch and just keeps on going. So, how do we know that today's going to be, quote, one of those days? Um, we used to say, so it was one of those, what do they call it? Rip your face off rally days. Now, this can be a downward move or an upward move, but in specific context, the upward one is the one that is what we consider forced buying, that it just keeps going in the face of everything else. It's has gone farther than we thought, and it just keeps going. It gets through ADR levels, and it just keeps going. it hits major moving averages. Like it just keeps going. For newer traders trying to figure this out, it will look like it's done. It'll hit spots where you think that's it. It's done as much as it's going to do. No way it's going to go higher from here. And it just pauses, consolidates, and makes another leg up and just keeps on going. And so they often get ran over, or they sit out the whole time waiting for a reversal that never comes. And by the time it does, you've exhausted yourself, got bored, and you looked away. Maybe you're out of trade opportunities if you're dealing with PDT and maybe in doing stocks instead of futures. There's all these different things that just make it prohibitive. So, how do we take advantage of these kind of days? One, validating that it is one of those days, recognizing it for what it is, and then checking throughout the day, are we still in that kind of day? Has anything changed yet? One of the things I'll recommend is go back and find other examples of this one particular day because it does repeat. It's a bit like that game Mahjong, right? Where you're trying to match the tiles. Well, you're trying to match other days that look exactly like this day. And of course, it's not every single candle matching up, lining up perfectly, but it's going to have all the same characteristics. And if there's any differences, it's often between the gap level. So the gap between where we closed yesterday at 4 and where we opened today at 9:30. A lot of these trend days start with a gap up, right? These forced buy trend days. And that gap usually is around 1% or so, that it's already so big at the gap, the market doesn't even try to close it and it just continues to move in the same direction. That's a checklist right there where if you have a gap and the market doesn't even try to close the gap and instead just continues in the same direction, up or down, that is one very specific piece of criteria. Check the board. It is continuing to widen the gap. It didn't even try to close it. That's really strong. Markets want to close the gap, and generally they'll at least try. So if the gap is so big, 0.75% or maybe 1%, a lot of times it just won't. It won't even try. Now, the one that we're looking at from Wednesday, it wasn't one of those really big gapped up situations. The difference between the 4:30 close or the 4 o'clock close and the 9:30 open, it wasn't very much. And even in the drop down at the open, it never exceeded the Globex low. So it didn't necessarily fit into one of those that was an obvious gap up. One of the criteria that I have when it comes to trend days is defining the characteristic of what is today. If we're inside of yesterday's price action, I do not call it a trend day. It doesn't mean that you can't have trending price action because trending price action is the very description of trend: higher highs, higher lows, a continuation in the single color that you're working with. Okay, that's pretty easy. We can see trending price inside of our own Globex, inside of yesterday's range, even inside of two 15-minute candles. If I open those candles up on, say, 1 minute time frames, I could find trend. Trend is easy. Is it a specific thing called a trend day? For me, if we are inside of our own Globex, then we are not in a trend day. We have to get out of that before I'll start to classify it as a trend day. So if I mark out Globex range and we examine this amazing day that we had that just kept going, you'll notice we didn't get out of the range until after lunch. Well, that fits part of the criteria we were just talking about. You'll have a morning session, you'll have an afternoon session, and you have lunch that separates the two. So if you have a morning trend and it stalls at lunch, it may reverse. It may stall out right there, or it could continue. So in the morning session here, if we wanted to get specific, we didn't have a trend day yet. We just had an inside day. And we ran up, broke through the Globex after lunch, and then we had a trend day into the afternoon. One of the criteria to trade the morning part of all of this would have been that we started the reversal and we would just lay out our levels. And that's a part of the checklist, right? So asking the question, why are we moving? Sometimes we know the answer and sometimes we don't. And you'll grow into that one the longer you trade. When I was new, I had very specific places that I would go to, but I didn't have very many, right? So if it wasn't on a headline in one of those two or three places that I went to, then that was it. I didn't know why, and I would just be out of luck. The longer you trade, the more sources you have. A lot of times you'll have a why behind it, but not always. If you can't find it, it's fine. So, what sparked the move or what headline triggered the gap? And remember, on this one, we actually didn't even have a gap. Was there a big gap in global markets? What happened in the overnight and what was happening with Asia, with Europe? How did we get to where we are? And that usually does tie into an overnight gap. And then what's going on with dollar yields and gold? All of this before we get into the 9:30 open. And if you show up late, say you're not in the Globex, you don't get here until 10:30 in the morning, that's fine. You can still do the work. What happened overnight? What happened this morning? And do we know why we are where we are? What's causing the move? A lot of times we'll get these really big candles. It doesn't look that big now that I'm zoomed in this tight, but they're pretty big candles. And that's unusual. So we should be able to put a why behind it. Where's all this big flow coming from? What headline is it? A sneaky little thing that comes with these grind days is that you can't find anything. That you'll look around and there's no specific economic event. There's no one single headline that stands out. And that's a part of the confusion and trickery of one of these days because we don't have something to lean on. We can't say, oh, yeah, it was CPI at 8:30. So a lot of times we just can't put our finger on what it is that's causing it to run. And then we doubt ourselves. We doubt the move is going to continue to hold. We think it's going to give up at any time. We can look around and check things like market breadth, especially in the pre market. What stocks are up and are they in our particular group of interest? So, financials, consumer discretionary, technology, those three are always really important for a trend day, up or down. And once we get into the open, did we continue to keep those? But we can also look at market breadth from the perspective of how many stocks are up versus how many are down, not just what sectors. So S&P 100 got 100 stocks. If more than half are going up, that's good. If 75 out of 100 are going up, that's better. 85 out of 100, 92 out of 100, you get the idea. The more going up, the better. And that's just in one. You got the S&P 100, the Nasdaq 100. You can look at the Russell, the Dow. Can try to quantify how many stocks do we have moving to the upside versus how many do we have moving to the downside. If most of the marketplace is headed to the upside, your trend very likely is just going to continue to push. So that's breadth. Then there's very specific companies, what I call the hyperscalers or the Mag 7 group. Now those names vary once in a while, but for the most part, it's Apple, Amazon, Microsoft, Google. There's a list I can show you where to get it from, but it's those same ones that we always hear about. And if they're not falling, then we can continue to go up. If they're going up with us, we can definitely continue to go up. And it doesn't need to be all of them, but they need to at least not go against us. So that is important. If we're running and they're just flat, that's okay. We can do it. But if we're running up and they're going down, this isn't going to work. And one of those two are going to fail. Once we get into the open, we do want to check on that gap. Did it hold and or is it expanding? And in this situation, remember, we didn't have a gap. And for the little bit of a gap that we actually did have, we closed it nearly immediately and then we overshot it. So the gap one just doesn't quite fit into this particular example, but okay. Then we have the ticks, cumulative ticks, and the clock. So tick, dollar sign, TICK. And I say the dollar sign because on Thinkorswim, you need that. And then TICK. Now that's the New York Stock Exchange tick. I've got blog posts on this. There's a lot of blog posts from others on this topic. And I use the one that I tweaked out a little bit here on Thinkorswim, but there's a lot of versions. And it's this one with the red and the green and the high and the low here. If we go back to the day where we had this Wednesday, just a few days back, one of the things that we want to check on and ask is did we stay above or below the zero line? If it's bullish, we would stay above. It's bearish, we would stay below. Because that would be a big piece of all of this. Now, I'm going to add the price action back to this because right now we just have the tool. We don't have price above. So turn on price. And we'll put it on the ES. Here's that trend day that we're focused on. And we can see how we stayed pretty much above the zero line through most of the day. And when we did go down below the zero line, it was just quick little dips and then we were back up above it. That's really strong, right? And that's what we want to see continue. We also can break this apart and say up until 11 o'clock, lunchtime, we were nearly completely dominantly in the green. So we didn't even really get down below there at all. We bounced off a zero and came right back up. Only really in lunchtime did we start to get down there. And when we came out of lunch, we were signaled very clearly that, hey, lunch is over, get back to work. So we had a nice spike there. And then we continued that dominant theme, mostly in the green. But you can see how now we were cutting deeper into the red, but still mostly green. So the ticks can really shine a light on that dominance of, hey, is it still bullish? Is it still going? If we were looking for that bullish move to end, one of the things that I like to look for is a cross down below 500. If we get that, then I want another cross down below 750. And if we get that, I want another one below 1000. I want to show, I want to see the market demonstrate to me that there's some strength in that downward move. We had the same thing on the upside. First, we got a 5, then we got the 750, then we got the 1000, right? On the run up. Showing us that dominance. That's what we would want to see if we thought the move up was going to end, or that maybe the upward trend was done. If we look at another piece of the puzzle, this is the AD, the advancing and declining issues, the weighted AD. Now, this is one of those very few studies that I have that I can't share, but I found a version that I can share and I stuck it in the Thinkorswim workbook. It will function just like this. Its image will look exactly like mine, just the numbers won't be the same. And that's okay because the numbers don't matter. How it looks matters. This thing usually stalls out around 200 or 220. Yours will have a normal stall level, whatever the number happens to be. Anything above that, or if it's negative, anything below that stall level, that would be your bearish and or that would be your bullish. This is a really great image of what one of these trend days look like. It pushed above the midpoint, that 250 for me, whatever your midpoint will be on yours, and it kept going. And the cyan line wasn't like way up. I got some examples of what that might look like, say like way over here, where it's above and beyond. And it wasn't buried down below either, right? So there's some examples here, say, where it just completely outran what was going on and left these bars behind, these histogram bars. So that's an example of what you don't want to see. If it's a good, strong, clean trend, then it won't be buried like this. It won't be jagged and sideways and just this. This is a really great example of nasty trash. This isn't a good, solid, clean trend. So we want to see that if we're going to get a rounded reversal or if the trend is going to end, we'll start to see this moving back the other direction. Now, sometimes it will just flatten out and it'll stay flat for the rest of the day. That's not what happened. It actually started to run higher again, but I've seen it just stall out and quit giving more. A lot of times when that happens, the cyan line will fall back down inside. So these pink and yellow bars will just kind of stall out and go sideways, but that cyan line will actually start to drift back down inside everything. And then we've got the C tick. Now, we talked about tick, dollar sign TICK, and that's for the New York Stock Exchange. But the S&P has a tick, so does the Nasdaq, the Russell, the Dow. So if you add the ticks up, rather than looking at each tick for each 5-minute candle or 2 minutes in my case, if instead you tally every one of them up, then you get a chart that looks a lot like this. So which one is which doesn't matter, right? Not for what we're doing, just the colors do. If it's a really strong bullish day, the green line should lead. And if there's going to be any crossover or weakness or reversal, the green line will cut across the other two. So it'll do it from the downside to go up, and it'll do it from the upside to go down. So if we were going to cross, or if we were going to fall, we would have seen a cross. Instead, what we saw is the green line leads, check, and they started to fan out really nicely, and they're holding this spread. It can get a little wider like it did here. That usually is an indication that we're going to stall out for a little bit. 'Cause we don't want it to get too wide. And we just want to see this constant, steady spread. I usually call that the fork pattern. You can call it what you want. But we just want to see that spread. And we don't really want to see them flatten out. But near the end of the day, it's going to happen anyways. Because we just, by 2:30, 3 o'clock, you start to lose that market participant, the drag on the market. The dealers start to engage, and so it a lot of times it'll just start to flatten out. But before 3 o'clock, it should continue to stay pointed in the direction that we're going, up for up, down for down, and we do not want any green line crossover. If you examine other days where we've had reversals, here's a good example. We were headed to the downside and we got a green line cross. Then we were headed to the upside and we had a green line cross. You get the idea. There's also the zero line. Are we above the zero line? Are we below it? Are we crossing back and forth through it? Those would be indications that we're not in a trend day, that we can't define a direction, can't keep it, don't have the strength behind it. And I am particular about it. It does need to be the green line. It's just the way it is. When this indicator was built, we didn't know that that green line had any significance. And it doesn't even make any sense. If I was to tell you what index the green line represented, it wouldn't make any sense. And you may notice that one of the four isn't even showing. I've got the purple, the blue, and the green. I do not have the red one showing. We don't need it. And because it's so small in comparison to these other ones, it throws the graph off. So I just leave it turned off. You can turn it on if you want to. I've got a blog post on this where I've taken pictures of what a really good trend day should look like. And the more examples that you can find of this, the better. Find your own. Go in the past, find a trend day, really study what that cumulative tick looked like. Because once you learn what that looks like, you can use it for a check throughout the day. You can continue to ask, hey, how's the trend going? Is the trend still doing good? The C tick is spread out, everything's pointed to the upside, nice 40-degree angle, or whatever that is. It looks great. No cross downs. Trend is strong, still good. No signal that it's going to reverse. So it's not one single thing that I use through the day to define this idea that we're in a bullish or bearish market. It's a collection cumulatively that I can go through all of these and say, yep, breadth is still strong, ticks are still green, C tick is still pointed to the upside, green line's leading. This thing is still going. And then look at the clock and say, yep, we made it from noon to 1. We made it from 1 to 2, 2 to 3. Every hour, we just keep going. It hasn't turned back. Just keeps pushing. In that push, you should be able to define your next target or level and your line that it should not cross on the way back. So if we use this breakout day, the first measured move higher would have just been from the Globex high to our own low. We could have used others besides that one. Say like where we opened to our own low and then started our measurements from there. But we have that high, so we might as well use it. Price should get up into the 1, 2, 3, 6 and then stall out, which would give us a chance to move our drawings, and then we would look for another push. In this particular spot where I have it drawn, once we got to 100 and we got above there, we needed to keep it. If we didn't, then 786 is the target. If we lose 786, we aim for half. If we lose half, we aim for the bottom. Since that didn't happen and we stayed above 100, our target is 111. Now, this consolidated like a late lunch. So we ran through lunch and then we paused. Didn't hit the 1, 2, 3, 6 in that pause. We just stayed there hanging out. Then we had a big push, like some kind of news. But it was a bit like a blow off top push, too. And then we went even higher from there. So it messed up the measure, didn't give us, this clean 1, 2, 3 like we normally would have seen. But it was a weird day, anyways, because we weren't gapped up, right? Remember, I pointed that out from the beginning. And our trend didn't start until we broke out and ran through lunch, which is something we don't normally do. So, what I do when this happens and we get a move that doesn't measure to my lines, once that bar closes, if it was down or up, whatever one, that's when I move the drawing. So I would start from that point and look for the next level to go from there. There's nothing you can do, right? If it overshoots your levels, then you just have to wait for that bar to close and then readjust. So it stalled out at 111, came back into 1. From 1 we would target 786. And this is really big. Since I went from Globex high, we really didn't have a lot of the middle to talk about. we really only had the afternoon. So you can see how the afternoon ended, and yay, great. It wasn't really helpful at that point, right? So that's what we would do on a normal trend day. Since this one is kind of sloppy and ugly, some other parts that you want to consider is we'll just back up and look what happened into the trading day. I'm going to make some room here. There we go. So when we got into the open, we had one red bar. That's the 5-minute open range right there. Now you can measure that one 5-minute bar every single morning at 9:30 to 9:35, but I generally don't. If it's a really small 5-minute, I don't want it. What's the point, right? It's just tiny little red candle, whatever. I don't need it. But in a situation like this where you have a really big red bar, I like to knock that one out. So measure it and then define things around it. This one was a little odd because it was part of these three bars collectively, and that can throw you off in your tools. So you can measure all three of them, or you can just do the one to stay consistent. I would recommend just do the one. But if you're good at price action and you understand the dynamics of the multiple bars and you got it, then do it. You can handle all of it. From the 5, this measured move to the downside, it was a 111 flip. And that one bar with the long tail and the way that it closed is a really good reversal bar. That signaled your flip. Now, how you take that flip is up to you. You can wait for the bar to close, wait for the new one to open, and pull the trigger. This is what we can define as a swing low. So after a swing low, we're expecting wicks. On every one of these bottoms, we're expecting a wick. So you can begin to appreciate where would you get in, which one of these wicks. And if it doesn't give you a wick, like this one didn't really give us a wick, then too bad, right? Like we expect the wick, but if you don't get one, you just don't get one. There's nothing you can do about it. So the candle closes, the new candle opens. You're waiting on the wick. You get a wick, you take the play. You got to get out of this box. So as long as we're not at the top of the box, then you've got room to the upside. You can define how much you're willing to risk based on how much room you have left to the top of the box. And you can define the midpoint, another level of risk, because if we get there, we could stall out and fade. Right. So we make it through the mid. You got to play to the top. From the top, we can start laying out our levels 1, 2, 3, 6, and we can continue from there. But we did have a really good reversal signal. So, it's not just can I play the trend based on all these big picture dynamics? It's can I play the trend and deal with the price action that we have on the chart? If you get warning candles, use them. This was a really big warning candle, like a blow off top. And when you get a blow off top signal like that and it doesn't reverse, that's another signal of how strong this market is. That it looked like a blow off top, but it wasn't. It was just a big push that kept going. They have something called what do they say was the phrase? One time framing. It's a weird phrase. What one time framing defines is that it's a single color and it just keeps going. Now we did get two dojis here and a red one here, but otherwise, once we got the reversal, this was like one time framing from 9:35 to 10:45. That's an hour of nothing but blue candles, green for you. It's another characteristic. When we do pause on these trend days, whether it's a downside or an upside, define the pause range. Markets need to consolidate. So if you can recognize that we have now begun a range at any point in the day, put the range in a box, and now you have GTFO. The range will either continue outside the box or you're going to flip and give it all back, just like we did earlier If I stole that box and I moved it back here, we had the same dynamic, right? The market stalled out. So that was our high. We didn't know it was the high at the time, right? But we got a high, stalled out, we got a low, and then we started moving sideways. We can define our box right there, and all we needed to do is GTFO. And price action gave us the lower high, lower high. We failed to keep these higher lows going when we broke right there. So we started getting lower lows, lower highs, lower lows. It's the very definition of trend to the downside, and measurable pullbacks, nice clean sweeps until we got to the open. So define the box at any point during the day. That'll be the pause, the consolidation. It's healthy to do that. So if we're healing and healthy, and then it breaks out and continues, the trend is still good. We corrected it in time, not price, healed up, and continued the run. So you can use these tactics throughout the day, and you won't go against the play because there's nothing telling you to go against the play. Even if you don't use the fancy quadrant lines the way that I do, and you instead just use the intraday high at whatever point you have it, right? There's your high, there's your low. Once we breach that 111, you can move it again. Always going to the high, never worrying about should I use the wicks, the body, do I use the red candle, the blue one? You could just always use the highest point in the chart and the lowest point in the chart. Don't even have to get fancy. It will still line up for you. Once you hit 1, 2, 3, you don't even have to wait for any other opposite candles or anything like that. Once you hit the 1, 2, 3, and that candle closes, you can move it. I don't do that, right? I'm a little more nuanced than that, but it doesn't matter. You can do it just as simple as that. And if we do set a high anywhere in the day or low from the other direction, and that becomes a dominant spot and we pause for a while, you can update your levels even if that wasn't a 1, 2, 3. You can just go ahead and update it because you need the real mid. Then if we breach it, at least it gives you new criteria, right? Even here, once we failed to keep going and we started to fade back, you could just move it again. So how do we define a trend day so we don't get our butt kicked and ran over, or we don't sit out and miss the move all day? Through that checklist and that criteria. Find old examples. It really will help. And then if you use indicators, I didn't really bring up much here other than tick, but say you use moving averages or a MACD, right? Whatever you like to use, put it on your chart and go back to some of those trend days and look at how your indicator behaved on that particular day. It will be very specific, very unique. It won't look like it did at any other time. And that'll help you out too. A lot of trend days won't be really big fat candles. So going to a smaller chart isn't really going to help you out. But if you're on the NASDAQ and it's a trend day and you're getting these really big fat long bars, 50-point bars, 70-point bars, go to a smaller time frame. I know I'm not saying be Jeremy and go to a 10-second chart, just saying go smaller so that you have some price to read, right? If you only get 5 bars an hour, you don't really have very much to work with. And then read that book. I did throw the book in the other day, Secrets of a Pivot Boss. it talks about these different kind of trading days. I was pretty sure I had them. Yeah, I did. I was pretty sure I did. You can find those likely in the stickers because I think I loaded them into this Discord. Yeah, I'll post the other ones. There's the double top, the gap. Yeah, that's not one of them. But those different days, I'm pretty sure I got them all loaded in here. You can find those two as an example. They're in the book. Um, there's other bits and pieces from the book too, but those are more about spotting it before the day begins, like a very narrow IB. We had that last night, by the way. That's one characteristic that I kept talking about in the morning briefing today was this very narrow IB that we had. So hopefully this will get you started on trading these nonstop grinding trend days. And there are different trend days, right? I want to make it clear that these ones where it just keeps going and going and going and it's like a forced buy is different than something, say, like this that was like shot out of a cannon, right? Like some sort of news event. And then like a pennant tight consolidation and another shot. And then that was it. It still kind of meets a little bit of the qualifications until we look at where we were inside of yesterday's price action. If you get stuck on any of it, just hit me up. I'll try to help get you pointed in the right direction. The other topic that somebody had asked about this week was working a 9 to 5. You know, a lot of the people we get into the Discord, they have full time jobs and they're wanting to trade and yet stuck because, well, they work all day, don't have time or opportunity or access to the market. Can they still trade? The question this morning was they work from 7 to 4. Can they perform after hours research to identify swing trades, defining some entry points, and they're looking for trades that are 2 to 7 days out? Now, the answer to that is yes, but, right? There's always a but. Yes, but it won't be the high momentum trend days because you don't know that you're going to get a high momentum trend day the night before, right? Like that's just not possible. Um, I used to spend my evenings looking over the charts, trying to find tradable opportunities for tomorrow, and most of them did not pan out. But that doesn't mean that none of them panned out. And I was really stuck in my ways and I was trying to find continuations of something that was already going on and or looking for momentum the night before, which, as I just mentioned, doesn't work, right? Trying to find momentum the night before doesn't tell you how tomorrow morning is going to open, right? And so it would be better if you were using pre-market at the minimum, but if you're going to work at 7, you would have to get up early enough to be able to do all of that pre-market work. It's just probably too tight of a time frame. So doing it in the night before, you just have to focus on strategies that are not necessarily leaning so heavy into momentum. And if you can add options to it, even better. Because with options, well, you can make money if we don't go anywhere, which really makes trading a lot easier. Most new traders focus on direction. We're going to go up and I'll make money. We're going to go down and I'll make money. But how about we're not going to go up and I'll make money, or we're not going to go down and I'll make money? Surprisingly enough, it's often easier to tell them to define for yourself where the market is not going to go rather than trying to define how far you think it will go. Just a second, trying to read through this question here. So someone's asking um, if having a subscription to Spot Gamma or Volland will help. Um, I mean, for swing trade, no. I think you would be better off with something like Trading Ticks, and that's a lot of that is already built into the Discord, so you wouldn't have to necessarily go get your own either. You could try to just use what we have first, and it's already a part of your subscription. Sorry, I can't type and talk. I'll screw something up. All right. So it kind of ties in with what we talked about the other day, trying to find a list of stocks to trade. Same structure as this. If you have a strategy, it will help you find stocks to trade. And you can do that with overnight analysis or after hours analysis, I guess would be the better words. So, yes, absolutely. Start with a strategy. There's a couple of them that I like for 7 to 10 days, and they're not very complicated strategies like inside day breakouts or reversal bars. Reversal bars, I'd rather play them at 2 o'clock in the afternoon, or at least, spot them at 2 o'clock in the afternoon and then play them before the close. But with your job, that time frame isn't going to work. You can still use them the next day though. So here's a reversal bar for an example where we had dropped down, rallied back up, and then closed near the very top of that bar. And we had a nice follow through the next day. Now, um, it was after that pattern right there, right? That's a 2 bar pattern. So, if you can read price, that will help you a lot. You can use things like indicators, MACDs, stochastics, whatever suits your play. I think short-term trades will really struggle to use those sorts of tools, at least on a daily chart. Maybe if you're looking at them on a 2 hour or a half hour, perhaps, but it's outside my wheelhouse since I don't use indicators to trade. I do use indicators to sort products, to filter down a list of stocks. So you could look for things with a really low RSI or a really high RSI, a low stochastics or a high stochastics. But price action, generally speaking, is going to be uh, the way I would do it. That I want to focus on things that are going to leave a box or leave a range, even if that range just happens to be yesterday, right? That all I want is a breakout of yesterday. So reversal off the high, a reversal off the low, a breakout of yesterday, and you can do that with a typical account, right? Like Thinkorswim. It breaks the low, that triggers your play. You got to buy. Hey, have a good weekend, buddy. And that would be your entry. If you're using stocks, I don't recommend any shorts, right? borrowing stock and taking shorts, I do not recommend that. If you're an experienced trader, then obviously you don't need my recommendation. You can do as you wish. But if you're a newer trader, I would not recommend borrowing stock and taking shorts. There are inverse products that you can use. If you want to go short things, that's what I would recommend. That way you're buying something that puts you short, right? You're not selling something like stocks that you don't have and that you had to borrow and that you had to pay to borrow. So that would put you in long only stock trades, which means you would want to spend a lot of your time and effort looking at reversals off the low patterns, like a morning star reversal, inverse head and shoulders, failed fair flags, right? All of those would be trades off the low headed to the upside. TRB setup would be another one, and you can find them after hours and look for stock that is on major moving averages, on the lower edge of a Bollinger Band, maybe something that has a Bollinger Band squeeze or a TTM squeeze. Those would all be things that you could trade by identifying them the night before. Some of the trouble you're going to run into is a lot of times when it comes to reversals, we often get the fake out first. So I'm just going to zoom into this area here and we'll use this low. So say we identified the previous low and price come down and hits it and we say, oh yeah, that was great. Let's even back it up to right there. Because this would have been one that I would spot. It's near the end of the day. We rallied back up off of that previous low. We're closing higher than 50%. That meets a lot of my conditions for a trade. And a lot of times I would take that before the end of the day as a long. The target would be the gap close. Look what happened the next day. It fell all the way back down to 220 and then it ran back up to close at the basically the previous day's open. So if you had triggered a long on that one at the open because you're at work and you're not there, right? And it's all automated, then who knows where you'd have got filled, right? I mean, really, who knows where that would have filled? For me, I would have been in a losing trade right at the open. If I had any sort of stop on from where I had gotten in the day before, it would have taken me out, right? Because that's like a $2.50 drop. Now, sure, from there, we held the line and we went up, but trying to do that blindly would have been tricky. So you do want to spend some time and effort into how are you going to get into those trades if you're already at work when the market opens? Do you have a 15-minute break somewhere? When I worked a full-time job, I had a 15-minute break that used to be at 9 and I talked them into giving me the break at 9:45 instead, right? And that allowed me 15 minutes after the market opened to have a 15-minute break. It wasn't the best scenario, right? But it was good enough. So if you can identify stocks that you might want to get into in the overnight, and then you can get even a 10-minute break after the open to put those trades on, that would help you a lot. If you can't, and you have to do it all automated, it is doable, but you're going to have issues with slippage, with getting immediately filled and stopped out, of not getting filled at all, right? There's going to be struggles, and you'll have to identify each one of them as you go with whatever particular broker you're using, because it will be tricky. You can get into stuff if you're just doing stocks. You can get into them in the pre-market. I'm not a big fan of that myself, but you can. The problem with that is, no stops. Stops won't work until you get into the RTH. So hopefully that provides some insight. And if you are doing options, you'll still have an issue with trying to get filled if you're not actually there to work the order and fight the bid and the ask, and you can still do it. I mean, there's just it's going to be tricky. But that one's an easier one to play because now you're not trying to find stuff that is going to go higher or going to go lower, but instead you're just trying to find stuff that is done going higher or done going lower. And I don't know if it sounds easier to you, but it sure does sound easier to me. I find it easier to play things in that capacity. There's continuation plays, those are helpful. So, find something like PLTR. This thing has just been a beast, right? And it just kept going and going and going and going and going and going, and it's still going, it's still going. So you could try to find something like this and play continuation plays. Um, I think you'll find a lot of times that the smaller companies will fit that, which is good too if you're just getting started. Smaller companies, cheaper companies, they're not as expensive. And the nice thing is you can start doing all of this with fractions of a share, right? I'm looking at PLTR, it's $130. You might be looking at that saying, yeah, but dude, I can't even buy, like 20 of those. No, but you could buy half of one, you know, maybe a third of one, because you're just getting your toes wet and figuring out how to run the platform, the broker that you're using to set up the orders to trigger at the right time. And, you just got to put in the work. So playing a fraction of a share would allow you to start putting that work in. When Google was thousands of dollars, I was trading that thing in a fraction of a share. I wasn't exactly making bank on it, but if you make, 30 or 40% account growth, who the hell cares if it was a fraction of a share, right? I'm just trying to make money. So continuation trades are nice if you can find something with, say, a blowout earnings and it's got consistent gaps and just keeps going. Try to play those. Um, Thematics are really good in a bull market. They don't really fit our current market backdrop. They're coming back though. Thematics would be like the robot plays we were just looking at earlier, or quantum. That's been really good. Uranium has been another one. The drone plays was another. So there's thematics. You get those. They'll all get lit and they'll run for a little while before it dries up. Pot stocks a few years back used to do that. All of those approaches can help you try to trade with doing research after hours and not being at the computer during the day. What else you guys got? Uh, Hold on, I got a phone call. Just a second. Huh, whatever. We're almost back to the high a day, which kind of goes to the argument that we were very likely just going to digest today, make it through the weekend, and start it all again next week. We could try a little bit of breakout here if we want to see some shenanigans. A measured move could put us into 59.32 cog line. That'd be a nice way to finish up the day, huh? Yeah, you like it. So as I mentioned earlier, just take it high to low. You don't have to get fancy with it. And I'm just using the RTH, not messing with Globex. And that defines our next level up. It also gives us our line in the sand down below. If we were looking at this as one of those trend days, then we had the reversal, like a TRB down there as well. Consolidation, like that's a bull flag with an upward facing flag. Then another break, another flag, another break. So one of the things that you can do in the breaks is measure the pullback and compare it to the previous pullback and see if the pullbacks are getting deeper. And then you can measure the run up to the previous run up and see if we're expanding further on each leg or if the expansions are getting shorter. If they're continuing to grow, then it implies the trend is getting stronger. And if it's shrinking, then it implies that it's getting weaker. I don't know if you guys seen the posts earlier today about these Bitcoin flywheels. It's funny stuff. Flywheels. Let's see if I can scroll back to it. Oh, I didn't get it in here? No, yeah, I did. There it is. I was gonna say, I'm pretty sure I put it in here. So it's kind of in reverse order, but there was a really good article on Moomoo about MSTR and how it inspired other companies, and now a bunch of companies are doing this. And it broke it down into what particular coin are they using. Like some are using SOL, XRP, Bitcoin, Ethereum, right? And so it broke it down into first what company it is, and then what coin are they using. So it kind of lines us up with what strategy are they playing. And the strategy, companies issue bond to buy Bitcoin. Bitcoin price increases, driving up the stock price. Higher price attracts investors, further boosting the share value. They issue additional shares to buy Bitcoin. Bitcoin rises again, boosting company market value. And they just run the cycle. The Bitcoin flywheel. This was the blueprint. It was kind of funny reading all of this. You know, it's MSTR pioneered the playbook. It's deceptively simple. Raise capital, buy crypto, and then fuel the flywheel. That 90 billion number or 9 billion, that just really set me back right there. You know, a bunch of kids just throw a company together and start doing this and then bang, 9 billion. They are larger than 90% of the S&P 500 companies with $4 billion of Bitcoin on the balance sheet. That's crazy stuff, dude. So some of these companies, it worked out really well, and then some of them, it did not work out very well. And that's what the article was kind of getting into. That this SBET, it worked great, but this other one, VVPR, it did not work great. I think it was that one. It really interesting between those two. And some of these BTC ones, they're miners, right? Like Mara's a miner, Hut is a miner. So, and I think they need to rewrite this because I thought this treasury thing was getting removed, right? Didn't the administration say they were going to back away? Well, I say that, but now I see treasury here and here too. So I don't know. I'm gonna have to dig deeper into that. But it's pretty interesting all the way around. We're always looking at thematics, so trying to find, you know, collectively groups of stocks that are moving, so we can try to play, and that fits the bill for sure. So I can probably share the link because it was on Mumu and that's public. Let me pull it up and I will share it with you. No, that's Zscaler. That ain't it, yo. Oh, there it is. They called them copycats, MSTR copycats. So here's the article if you guys want to read it for yourself. And I will just show it here for anybody who doesn't want to go through that effort. Probably a little hard to read, huh? So VVPR, look at that sell off, man. Talk about getting punished. Fell 12% post announcement, even though they are still up 22%. Now that contrasts sharply with SBET, which was up 2,300%. I thought that was a typo the first time I read that. From obscurity to outperformance. So here's some of the risks. Core risk exposure is the dilution death spiral. This does require perpetual equity issuance at inflated premiums, and the flywheel collapses when the MNAV is less than one, when stock value dips below crypto holdings. So if ETH drops 30%, SBET's 2.5 billion valuation could implode because ETH, Ethereum, dropping more than 30% would pass that MNAV being less than one, right? That's a little nerdy, but kind of get the idea. And then you have the SEC getting involved. And imagine that Elizabeth Warren having testimony on this. These schemes export crypto volatility to public markets. I wonder what her position is. She was probably long before each one of these companies played the game. So this is a new phenomenon. It's a thing now, right? It's not a one and done. This is going to be around for a while, very likely until it gets outlawed or until it blows up really bad. And then they talk about Trump Media launching that 2.5 billion Bitcoin treasury. and Hong Kong's stablecoin enabling the RWA tokenization. This strategy shows no signs of slowing. So I guess just get comfortable with it until it breaks. All in all, I thought that was a pretty good article worth sharing and getting the focus out there. Even at the bare minimum, maybe just avoiding the companies that are doing it so you don't have such risk in your portfolio. That's crazy that Amazon had more options volume than Amazon and AMD. GameStop had more than those. That's crazy. Well, that's rude. Looks like it's going to be a quiet afternoon. I didn't see it, but according to this, it looks like Musk went in with his eye dotted, and they were making jokes that he got punched in the face. He's still holding that. It's a nice ad off the low. I didn't realize we were close to a G7 summit. I thought that was still a ways off. June 15th through the 17th. I mean, it feels like it's still a ways off, but I guess it's creeping up on us. Canon, I'm not going to butcher it. I'm sure some Canadian will just screech when I do. It's in Canada. Eh? By the way, I had seen this once because I did it before on accident, and then I couldn't figure out how I had done it, and I've been trying to do it ever since. If you use Thinkorswim Scratchpad Have you ever seen pictures in there before? I had not until accidentally one time I put a picture in there. And before I even thought about what it was I was doing, I deleted it. And then I couldn't remember where the hell did I get that picture from. So I've been trying to put pictures in this thing for weeks. And I gave up because I tried, PNG and every kind of three-letter GIF that you can put behind a picture to get it to save as a specific format and tried to put it in here. No luck. But today I did it. And it came from Grok on um, a question that I was asking it about those robotics companies. So it was an image from here, and I right clicked the image and pasted it into the Thinkorswim chat. So this format can hold pictures, which is really cool to know that. I just couldn't figure out how the heck I had done it before, and so I couldn't duplicate it. But now got it figured out. So that's pretty cool. I don't know, it's cool to me. I don't know, I'm a nerd. The bull scan is lit up really good today. The bear scan is basically empty, and it's got Foot Locker in it as usual, junk. But look at the aerospace names we've got lit up: General Dynamics, Lockheed Martin, Raytheon, commercial services, Cintas. I don't know if you guys know that company, but they do like uniforms and they provide fire extinguisher services, that sort of stuff. I've worked for companies that used those uniforms, and when the company was making good money, that's what we would use. If the company was on hard times, then they would drop Cintas and they would get some local mom and pop company that didn't do as good, that didn't offer fire extinguisher services. The uniforms material wasn't as good. They didn't do like door rugs and stuff. So when I see Cintas doing good as a company, it really leans into the idea that stocks or that companies overall are doing good, manufacturing, production, those sort of companies. And if you look at Cintas, it has this weekly scoop that it's all the way back up at that previous high. And look how it got there with this last earnings, some digestion, and then it's just been a boss, just you know, a beast move. And those moving averages spread out so nicely like that. Textbook visual of a strong trend. Pulling back, never got below the 10. Now, that's the 10-day. And if we did finally violate that 10, we'll look to see if we can catch the 20. But until that happens, this thing is just good to go. And I know no one likes to buy the highs, right? And there's a lot of reasons to think that right now would be a bad idea because we've got this gap up and it didn't close, right? All the other gaps that we have on the weekly are closed and this one's not. So it's not going to be a good idea to try and buy this one here. But once it consolidates, if we get this breakout, it'll be a really nice continuation. If we reject, then a short term short trade is going to be back to the 220 or 221. We're aiming for this white line. It's the 3-day moving average, or excuse me, the 3-week moving average. So let's see if we got any liquidity here at all. Nope, no weeklies. Oh wait, no, 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 never mind. I turned off the weeklies on this. We would only see monthlies. Even if it did have weeklies, we wouldn't see it. The reason I did that is I'm on a side chart, right? I'm not in the real options chain, and there's only so much space. So I'm looking at one side, puts or calls, and only so many levels because I still want to see the chart up here. So I just adjusted the settings a little bit. We can see it's $2.50 wide strikes. The volume is like non-existent. So if you're trading options in this, you're making book because nobody else has made any. Let's see if there's any calls. We should have seen puts. You know what I mean? Like if it's bullish, institutions should have been selling them at the bare minimum. But we didn't see any puts really, and there's no calls either. So we got nothing. This is disgusting. And it's such a great stock. Company wise, it must be doing really good, or that last earnings wouldn't have had such an outcome. We even made it through dividend, right? It's where a company gives away money, and it still went up after that. That's the other way to do it, right? That you can bring the charts into the trade tab rather than bringing the trade tab out to the charts, and that way you get the full range of the options, and yet you can also see, your charts. And I was hoping that if we got right up front that we would see some kind of volume, but there is just nothing here. So that's too bad. If you're selling options in this, it would be okay, I guess, but you wouldn't want to buy any options, right? Like buying a call or buying a put would be a really bad idea. Wow, not even 1,000 options traded today. But I do like that stock, and I'm thinking that would be a nice stock play. The hang up here, right, is that it's over $200, and I like to use options to defend my stock position and maybe even enhance my stock position a little bit. So now you give me a $200 stock and I got to run it naked, no protection, no enhancement, and I'm just kind of, sitting there with my feet hanging out. Doesn't sound good. So what do we do in a situation like this? Right? What I like to do is find a way to trade it anyways. Does it have any exposure in an ETF that might have more liquidity? Or is there some sort of single stock ETF? Usually, if it's that thin, it won't have a single stock, but we should be able to find an ETF that has it. And if not, maybe we could find a mutual fund or something. PRN has 2.68%. That's not bad. Let's see if PRN has anything. Probably not, since I don't even know what the heck it is. Nope. That's a no. It's worse liquidity than Cintas. Yeah, no. It also said that the Qs have a lot, but that wouldn't do us any good. We'd trade the Qs for our own reason. It did mention growth names like VUG or IWF. That's not cool, huh? I asked about a mutual fund instead since we weren't finding any. And with mutual funds, we won't necessarily need the liquidity, right? Because it'll a lot of those will just cap after hours. Fidelity's got one FCNTX. Yeah, a little bit of a lag. It's not back up to the high like Cintas is, but it's carrying the same thematic, moving in the right direction. Man, that just looks really good. They're very expensive options too. If you're looking at something like a leap play, you'll pay out the nose. Massive wide bid ask spread. I was thinking there could be a way to, like run a calendar, a diagonal or something. Never mind. That's the tricky stuff, right? I think that's where a lot of people just go wrong. They find a really good chart, really good stock, and they evaluate the options and they trade trash, right? And then if it doesn't work perfectly, you get hit those options. And the ES made it up to our 11 and then reversed as it should. Right. That also happened to have been a little bit of a shootout above the Globex high. So now we're watching the 100 level. If we break below that, we target 786. To get to that 786, we have to get through 5911. It's a cog line. And we hit the cog line up here. That was 5932. So those levels matter, right? That's right where we reversed is 5932 cog line. So if we break 5920 and a half, we'll get to 5911, get through that, 786. Then we'll have the RTH open also to deal with. That actually looks like it's the 11. Close enough. The cog line is the open. And that's if we break the one here. It's late enough in the day, 20 minutes. We could just chop right here between 123 and 100, go into the close, nice and quiet. Well, that's a name you don't see popping up on the bull scan very often. Ford. So many times I've tried to do options trades on this that are, like the wheel and things like that. It's it's a great product to do it because it's really cheap, but it's a horrible product to do it because there's just no volatility in here, right? You try to sell the options as a part of the wheel. So, say you're selling like the 9.5 option, $6. I mean, I don't want poo poo on the strategy, but it's $6. So you sell that, you close it at $4 profit, but it took you 3 weeks to get there, right? And then worst case scenario, you get assigned, and now you bought the stock at 9.5 minus your $4 or your $6. It didn't really help, right? It didn't help. So Ford, while it is a cheap stock, it just doesn't have the volatility to make the wheel a good play. Now, if you run it at the money, do a $10, you're still only going to get, if you're lucky, you get that 13 cents. You probably get 12. Hmm. They both showed up. I wasn't sure which one would. One of these I thought would go towards options, and since I didn't have options loaded, figured it wouldn't pop up at all. Hims has really high implied volatility right now. So if we were looking for something that we could sell to open for like a wheel, that has the highest in our list. If you haven't heard me talk about this before, if you want to do a premium trade, one of the things that I don't recommend is running a high volatility scan, finding the highest stuff out there with volatility. While that will give you ones to sell that have the most amount of money to sell in it, you'll you'll get a lot more losses, right? Because you're targeting things that are the most violent out there, and then drawing a line and says, "I bet you don't move." It doesn't work out too good. That's not what we did here. We already had a list of stocks, and I just wanted to sort them by the ones that had the highest versus the lowest within my own watch list group, right? So it may not sound like a big distinction, but it's a very big distinction. We didn't search 7,000 stocks in the marketplace to find the most elevated volatility out there, right? And that I don't want to do that. So HIMS is a part of the GLP-1, but it also had its own thing going on, and it's had some pretty wild moves lately. So let's take a yeah, take a look at that intraday swing. That's pretty wild. Put it out here on the daily and weekly. Really awesome scoop pattern, really deep too. If we ignore this blow off wick here, then we've already completed the cup and we're getting the handle. It's a good handle too because it didn't go down to the half, right? If your cup and handle drops back too far, that's bad. You want about a third. That looks like about a third. Really good example. So now that we have this cup and handle, if we wanted to project what happens next, then we can focus on, say, half and whole. I like the 111 and the 1236 when I'm doing a lot of intraday stuff. But when it comes to this sort of measurement, we want to use what the textbooks talk about. And the textbooks talk about using 1.5 and 2. So, two of what, right? Half of what? Well, this is what we measured. And we're taking 50% of that, which is right there. So, we'll just make it stick out here. That's 50% of what we measured. And that's 100% of what we measured, right? That's what the textbooks will tell us to do. So it's a really nice TRB setup, ran us back to the highs. And if we broke out and continued to run, then 85 and 105 would be our high side targets. And there's a market catchem that says if 80, then 100. It sounds funny, right? But if 40, then 80. If 20, then 40. Weird things, but yet they tend to work out more often than they don't. So even if that's true, we did get above 40. We didn't quite make it to 80 the first time, and now we're rerunning it. 80 would be the current goalpost. We would expect to digest, hold there, and then maybe even pull back again after such a big run. Pull back and check old resistance as new support. So a little bit of a Busby. Then break back through 80 and make a run towards 100. It would take a lot of time to do all that, right? The idea being that this would likely be a nice swing trade through the year and into next year, possibly. If you're not into that longer term swing trade, then you could certainly shorten it up, play a shorter time frame. And if you're wondering why, here's a $5 spread, right? And they're offering $3 for it, which is absolutely amazing. Normally, you would get cheated and they'd want you to open it for $2.10. It's only worth um, $2.50. So why are they offering us so much money? Well, probably because it's about to dump. It's it's up on the day, which is another reason it should not be so positive. But whatever, your risk is much less than it should be. You're risking $2 to make $3. Yay! So if you did this, it has 231 days to it, and you can't make more than that $3.10. So why not do this trade much closer to expiration? Because the amount of money you make is not going to become suddenly greater. In fact, it's likely going to be less if you get closer to expiration. If you've got a small account, you can't wait 230 days to start another trade. You can't even wait half that time. You need to keep opening new trades. And to do that, you got to close old trades. So if you've got a big account and you don't need to close one before you open another trade, you could get this and carry it for half that life, right? 115 days or so, 100 days. It wouldn't slow you down and you could still trade other stuff. So that's a bit of the dynamic for going out this far in time. For me, I don't need to close this to open a new one, so I could take that January one. The idea would be sell the puts and then time a long call. I don't necessarily want a long call right now because we just, we're having that push up on the week, but I would like to time a long call. Maybe if we can get above this gap close and close above it, so get above 58 and get a close. That would be the Adam Grimes pre-breakout consolidation period. Look for price to kind of tighten up like it did here, to do this and then break out. I'd like that. So I'd like to go long if we can close above 58 with a call, but finance that call early by selling some puts. And the time frame of the call, we would not want 230 days, right? We want something much closer to expiration. You could also just target a butterfly, short duration. I don't know what this would cost, but let's go see what, say, I guess we could do both. We'll try a 55, which is basically right where we're at, a little less actually, and then we'll try a 60. Because what I'm thinking is, you see how we got down to this old gap close, and then we stalled there. We could get to this other gap close, and we could stall there, preferably on top of it, not below it. So a butterfly at 60 would be us getting up there and then stalling out against that gap. So a $60 butterfly, and if we run it each week, they shouldn't be very expensive. So we could, likely keep the cost down. Yeah, it's a credit. So we know that ain't true, right? This would fill for 1 penny. We'd have to, adjust the order, try to fill it for a penny. And what are you risking? Like $1. Yeah, is fine. If it doesn't work, you're out a dollar and commissions and do it again. Since it's so cheap, you could try to spread it out. We've got $1 wide here, so we could try, 58 and 62. Now it's got cost, right? Now it's 15, 19, it's kind of bouncing around 18. Okay, well, I put it back and the cost is still elevated. So it must have just been end of day shenanigans, volumes there. The bid ask is it's okay. So it's moving around. So 18 cents targeting a week out. If it doesn't work, you would very likely lose all of it. I would set the price lower and, try to fill it into the close. This close to the end of the day probably wouldn't get any a fill if you try that, right? If you try to work the order. If you just pay what it asks, then yeah, probably. BTBT, really high implied volatility. Bit Digital, it looks like the name. Yeah, Bit Digital. That is just an ugly turd floating in the punch bowl. Their earnings have improved, had improved, then it went right back in the toilet. It's very odd that they had earnings and they're still holding it at this point. Still less than $3. Very likely doesn't have any options of note. Well, it should have some, or it wouldn't show up in my scanner at all. Not a lot of volume, but more than Cintas, I believe. Nothing. Glitching out. Thinkorswim at the end of the day. Thanks, Thinkorswim. I don't know enough about this one to want to do anything with it. It's really cheap though. One of these nights we're gonna have to talk about how to play these really, really cheap options trades. I was coaching someone that had taken a pretty large position in stocks and then was doing covered calls, and it was in something really cheap like this. And there's a tactic that you can do when you're trying to dig yourself out of a hole like that, because you have a floor. You know what I mean? Like it can't fall farther than zero. The worst that's going to happen is the stock gets delisted or something like that. So it was a unique situation. You wouldn't do it in something like Apple, Microsoft, because the floor is just too far away. But wow, the Mag 7 is getting lit into the close. Google, Meta, Microsoft, Snow, they're all popping up in there to finish the weekend off. to finish the day, the week, and the month, right? When we come back next week, we're going to be in a new month. And I would still love to short Disney into the dirt. But with the focus now going against Netflix, it makes me wonder if other streamers are going to get um, some love, right? And so I'm hesitant to short Disney because of that. They're trying to like bring back Hollywood and tax these streaming services that are making movies overseas and dropping them into Netflix. And I don't know. I just think Disney might benefit from that somehow. So I don't want to short it, but it's such a turd. Kavu is almost back to IPO. GoDaddy. That is not right. Something is wrong there. Wow. That metal company, Cleveland Cliffs, they're taking a beat down. That is a textbook chart to the downside. You can see how it's maintaining this drive below the red line. It's below the 30 week. And if we bring it up on the daily, then it's been maintaining on a 50 day. So deep drops back to 50, and then another deep drop back to 50. Actually, it's been hitting 100. My bad. Overshoots into 100. And it's not done yet. Still making new lows. That is just broken. And Snap is another one that has started to flip around. This is a little measured move here. It's like the same one that we were playing, only upside down. So we can measure it this way. And there's our 1, 2, 3, 6. And now we've been running it back up. Now that's a monthly chart, right? So drop down into a weekly. Pretty nasty. It needs to hold above this one. Man, that's ugly. But it's Snap, right? Look at the reversal for today. Oh, and we found it after 4. Dang. What's the options look like on this? Okay, it's crazy cheap options too. That wouldn't be bad for Monday, depending on how it opens. you're looking at, like $2 or $3 for a call. You don't need to get this in the money stuff because we don't have any reason right now to think about spending $35. But let's see how it opens on Monday. If we have an open that say say we're gapped up in pre-market and we open and we fade down to the close today and we bounce on it, that'll be a nice trigger for a long. If we open in the pre-market, if we're down and then we get into the open and we bounce on today's mid, the 50%, we start to run, then catching it on a breakout would be another trade long. I wouldn't necessarily like it fading to the 50%, but it would be okay, right? This is like a little micro Morningstar reversal here. I say micro because it's not supposed to be a part of all of this, right? That's why it's not very good. What would have been better is a move like this and then a Morningstar reversal and then the shoot, but we didn't get that. Still, this is a really nice reversal, just that one bar. I really like it. And the options are crazy cheap. It's $3, $2, you know. TRB back to the top of the range. Now, you could wait to get out of this box. You could. I don't want to. And I'm very likely going to take this on Monday before it even gets out of this box because I want it down here. One of the things about options for me is I'd rather buy a call when the stock is red, and I'd rather buy a put when the stock is green. If you wait for it to turn green and then you buy a call and you're wrong, the call will lose more money, right? That's just the name of the game. But if you buy it while it's still red and the call loses, you'll lose less money. Statistically, on average, you're just going to have smaller losses. It won't stop you from taking a loss. I know that's what a lot of people are worried about. They don't want to lose at all. Sorry, you lose in trading. It just happens. So I'd rather make sure that my losses are small, my wins are big or bigger, and that helps do that. So when I can, I'd rather not wait for this to turn green and run all the way up and then buy a call along with everybody else that's buying a call after everybody sees it. So that one is going on the list for Monday, and we'll see how it opens. If I forget, then hopefully somebody will remind me Monday. All right, everybody. I hope you have a good week, good weekend, and come in and do it again next week. Make some of that money. Hit me up if you got questions. Otherwise, I'd say let's wrap this up and get the weekend started. Hey, I thought you were gone. Well, you have a good weekend, buddy.